Option Stalker is fully integrated with brokerage APIs, so that means that you can route trades right through the platform, and I think you're going to love our order entry features. Let's go right into options. There are three different ways that I can bring up an option ticket. One is I can click trade options at the top of the platform. I can click trade options below the chart, or my favorite is right click and select trade options. It's the second one down. The symbol that's in the chart is going to load, and you'll see the option chains come up. So let's take a look at some of the different features within those chains. I can select how many months I'd like to display in the chain and how many strikes. In this particular case, I have 3 strikes. Let's go with all of the strikes. And I'm going to expand this window here. And right off the bat, I'm going to show you a really cool feature. I thought, if I've got a position in an underlying and I open up the option chain, I don't care about everything else that's going on. I want to see my position. And so this is the position. I am short the 316 calls and I'm long the 316.50 calls in the SPY. And so I know that because it is shaded red, solid red. That means I'm short. Solid green means that I'm long. Now, if I wanted to exit the trade, I would simply click on the bid. I'm long. Click on the bid, and that would represent a sell order. Click on the ask, and that would represent a buy order. As soon as I do that, the system already knows how many contracts I'm long or short, and so that's entered in. I was short 10 contracts and long 10 contracts, and it would calculate the debit or the credit. In this particular case, I'm buying a closer to the money call and I'm selling a farther out of the money call, so that is a debit. The price reflects what the current bid ask is on that spread. So if I wanted to load a price of 13 cents, I click on the bid. If I want to load a price of 16 cents, I click on the ask. So very easy for me to exit this trade. I've got a couple of choices for order type, limit and market. Those are the only 2 choices for spread orders. There are many other choices available for single-legged option trades. So that's how easy it is. Let's say that I change my mind. I want to adjust the position. I'm going to open up the December strike prices, and now because I've selected all strikes, you're going to see lots of different strike prices. And this takes forever to scroll through, especially if you're trading index, so you're probably not going to want to have all strikes open. You probably are going to want to limit that to maybe 3 or 4 strikes, but there are some other ways to do that. Before I show you that, the blue line here represents 2 standard deviations away from the money. So you've got one below and one above. The red lines represent 1 standard deviation above and below. So this is really nice for those of you who like to do credit spreads and who like to stay 1 standard deviation out of the money. So I'm going to click reset here because we're not going to close this trade down. And in fact, we're in after hours trading right now, so I wouldn't be able to exit these trades anyway. But I can show you the functionality. So let's say that I want to add another credit spread here and I want to sell a put credit spread. I'm going to click on the bid because I want to sell it. Now when I do that, it's a hollow red box showing that I'm selling, and you'll see the sell order already loaded on top here. And then I'd be buying the 311 puts. Now I've got another credit spread. You can see credit spread, 8-cent bid, offered at 12 cents. You can click on the ask, that price will load. Click on the bid, that price will load. Adjust up, adjust down, whichever way you'd like to do it. So I can submit that trade and it will appear right here at the top. Now I'm going to be doing some live trading using the option chains, and when I do that, you're going to see a couple of other fields represented here. And this was rejected because we're in after hours trading. But if the trade were live, you would see modify here. You can add to the position. Let's say that you want to do another spread and you're scaling in. Click the add button. It'll add another trade just like that. And before you submit, you can adjust the price up or down. So you've got modify, add, or cancel will be the third field. As soon as those trades are filled, then the modify and the cancel fields are gone. There's nothing to modify and there's nothing to cancel, but the add field will always remain there so that through the course of the day, if there's a position that you wanted to add to, you can do so very easily by just clicking add, boom, the order is already there. So let's take a look at a couple of other features. I'm going to reset these fields one more time. And you'll see the order disappears. I want to scroll back. Hey, what are these lines? There's a black line right here. In the background, you can see a black line. That is the 100-day moving average, and that is the 200-day moving average. This also is used when you're selling spreads to make sure that you are, let's say for instance, I'm looking to sell a bullish put spread. Well, I'll want to be below that support level, that 200-day moving average, so you would select that bullish put spread right there. Or perhaps I'm selling a bearish call spread. Well, depending on where the stock is, in this case, the major moving averages are way below the SPY. But let's say that the 100-day moving average was above the SPY, then I may want to sell a credit spread above that 100-day moving average so that the underlying has to move through that technical resistance in order for that spread to be in danger. So they're just tools that you can use. The 100-day moving average, very important. The 200-day moving average is very important. The 1 standard deviation and 2 standard deviation, also very important when you're credit spreading. So what I can do when I go into select these strikes, I can select just 3 strikes. That's going to really limit the number of fields that are opened up. And you can see there'll be 3 above and 3 below. I can select 4 strikes, 5 strikes, or if I want, I can use standard deviation. So let's click it now and see what opens up. And there's my 1 standard deviation. So I'm going to click on 2 standard deviations, and now you'll see 2 standard deviations away from the money. So it's a nice way to very quickly eliminate a lot of strike prices. Whatever the setting is here, the system will remember. So if you tend to be a buyer in a particular market environment, then you may want to limit this to maybe 3 or 4 strikes. If you're a credit spreader in kind of a wild market where premiums are real rich, then maybe you want to use your standard deviations. Completely up to you. You can also determine the number of months that you want to display. Now, if I select 1 month and there are weekly options, it's going to show me all of those option strike prices that are within 1 month. So if it's got a lot of weeklies, it'll show me all the weeklies up to that next regular expiration month. If I click 2 months, it's going to show me 2 months out regular expiration and all the weeklies that come before that time period. So select your preferences. Now I want to show you a couple of other nice features. Let me enter another stock here. I'm just picking randomly. I'm going to go with Target. And look, I've got a position in Target. So again, that's the only thing that opens is my position. And I know that I'm short these puts right here. If I want to buy them back, all I got to do is click on the ask and click submit. Well, I have to enter the price that I want to route that trade at, but click the ask, adjust the price, click submit, done. And if I wanted to, let's say that I wanted to create a spread out of this. I'm short these and maybe I want to get some protection. Now I've just clicked down on this price right here. But let's say that I want to create a spread. I just click down on it and push it to the strike that I'd like. And now you can see the limit price has changed. Let's say that I come here and I want to buy this option instead and create a debit spread. Put debit spread. I can do that. If I wanted to, I could move it anywhere I want. I could even move it to another month if I wanted to, but that would require you to scroll down or at least to display those other months. So if we went to maybe a 3 strike or a 4 strike, we'll do 3 strikes. This is there we go, and we can open that up. And you can see I'm short a couple of options here on target. So let's say that I click this. I can also move that into the next month. So let's reset that and let's go into take a look at what we might do if we're spreading. So let's say that I want to sell a call spread. I'm going to click on the bid, and I'm just picking arbitrary spreads here, and I'm going to click on the ask, and now I've got my credit spread right here. So you can see 49-cent bid offered at 61 cents. Well, let's say that I changed my mind and I didn't want to do a credit spread, I wanted to do a debit spread. I could simply adjust that leg like that. The price will adjust, and now it's a debit spread. So very, very easy to adjust which actions we're taking on which strike prices. So we can reset this again, and let's go into SPY. And let's take a look at a couple of multi-leg spreads that we might want to initiate there. Let's say that you are an iron condor seller. We'll click on any arbitrary expiration. We're going to expand that. We'll go to maybe one standard deviation, and we'll go to the December 20s, and we'll take a look, and let's say that we want to sell an slightly out of the money condor here. So we're going to click on the bid because we're going to be selling this call, and we will click on the ask because we're going to be buying that call. And so now you can see there's a credit listed. But for the condor, we're also going to be selling a farther out of the money put. And so we'll click on that, and then we'll buy that one. And so there's my condor, selling that put spread, selling that call spread. There's my total credit. You can see it's 40-cent bid offered at 52 cents. So the system will calculate exactly what the credit or debit is. Well, let's say that we do things a little bit differently. Let's say that we feel the market's got a downward to slightly neutral bias. Well, we want to sell that call spread, but we may want to buy a put spread. We can click on that, we can move it up here, and now all of a sudden you're going to see this price change right here. So this spread, if I'm buying this spread and selling this spread, it's 3 cents bid offered at 14 cents. And it is still a credit, but probably barely a credit. Okay, so that's how you would adjust your prices on that. And again, if I wanted to adjust this closer, you can do that. You can move all of these prices up and down at will. So that's a brief overview of how to enter trades. You can also reset at any time, and you can do single-legged options. Let's say that I just want to buy one leg of an option trade. And let's say that I'm bearish, extremely bearish, and I'm going to go right at the expiration tomorrow, and I'm going to just buy an out of the money put. I click on it. When I do that, you can see it listed here, and it's a buy. We know from the hollow green box that it's a buy. Now, when I click on the order type, I've got many different order types that I can select from. Remember, when I was spreading, I only had limit and market. I have stop limit orders. I have stop market orders. I have OCO orders. I've got trail bid and trail ask orders available to me. So if I place a stop limit order, that means, and I'm buying, then this needs to be above the current price. So a price of 48 cents would not really work. We're going to come in here. Maybe we'll put in 55 cents. And that would be my stop limit price, 55 cents. If it gets above 55 cents, it trades 55 cents, I'm trying to buy it at that limit price of 55 cents. If it were a stop market order and it hits 55 cents, I would be buying that option at the market. Now I can also place an OCO order. Let's say that I have a position. Now there is going to be a little pop-up window that comes up that tells you, hey, for OCO orders, the stop component of this order is a limit order. It's a stop limit order. It is not a stop market order. And I chose not to have stop market orders because option bid-ask spreads are oftentimes very, very wide. So give yourself a chance to try and fill at that price, monitor it, and know that you've been filled. Now, if by chance you're filled, or excuse me, the stop is activated, you will get a pop-up alert that says, hey, you've got a stop limit order working. It's been activated. We're trying to sell it at that stop price, but you might need to adjust your price to make sure that you get filled. So there is a backstop to it, but I'd prefer to have all the OCO orders be stop limit orders. Try and give yourself an opportunity to fill at a decent price. And you can always take this warning sign down by just clicking this, but I want all users to be aware that that order is working and it's not filled yet. Now, OCO orders are only available through Tradier, and Tradier actually holds the order on their servers. So that's nice. It's already placed with them. When you have an OCO order, and let's say that I'm long an option, and so in this particular case, let's click on this option. We'll reset that. I'm going to click on this option, and I want to have an OCO order working on this particular option. So I'm going to have a limit price that I'd like to sell it at, and I'm going to have a stop price that I want to stop out of the position on. So what I'll do is I'll click this, click OCO. Okay, I'll acknowledge that. And now I need to set my target. So let's say that my target is 55 cents. So I'll enter 55 cents. And let's say that my stop on it is 25 cents. If it gets down to 25 cents, I want to sell it on a stop. There's your order. There's your limit price, which is also, your limit price will always be your target price. And then you've got your stop price, so that would be a stop limit order. Once it's activated, you would click submit, and the OCO order would be routed. Let's also take a look at a trail bid. So these are trailing stops. It works for single leg options. It also works for stock. So this will be the same in the stock ticket. So I'm going to click trail bid, which, and here you can see trailing stops reside on your PC, and they will be lost if you lose your internet connection or if you close Option Stalker. Acknowledge that you're aware of that. So this is actually a feature that we added, and the data is coming into your PC and the positions being monitored on your PC. When the condition is met, then the order is routed. So let's place a trailing stop. When I'm long an option, I like to trail the bid. When I'm short an option, I like to trail the ask. So in this particular case, we're long an option at 41 cents, and I want to let it continue to move higher, but I want to provide myself with a safety net and stop myself out of the position. So we're going to select a trail amount. Let's say that their trail amount is 10 cents. And as the option goes up in price, we're going to trail that option by 10 cents. And then it's going to ask me, well, what would you like to do on the exit? Do you want to use a market order when that's activated? Do you want to try and sell it in the middle? Do you want to sell a bid? Do you want to sell the ask? What do you want to do? What's your order type? Well, let's select mid in this particular case. And you would click submit. Now, when you click submit, it knows that the current bid is 39 cents, and the starting point for this will be 39 cents minus your trail amount, so it'll actually start at 29 cents would be your initial stop, provided that the option didn't do anything, it didn't go up, and it just simply started to drift down. But let's say that the option ran up to 69 cents, then 59 cents would be your trailing stop price. Once it trades at 59 cents, then the system would be trying to sell the option between the bid ask. So that's how the trailing stops work. That explains all the features that you have in the option order entry screen. If at any time you'd like to, you can go in and change the symbol here. So let's say that you want to trade some Boeing options. Well, I didn't clear or reset that previous order. It didn't like that, so it put that pop-up saying you're going to abandon this order if you leave the screen. But in any case, you can enter the symbols here, or you can change the symbol on the chart and then pop the option screen back up. It's pretty much easier if you just enter the symbol if you've got a number of different stocks and options that you're currently monitoring. So that's the order entry features. I'm going to be having a number of different videos where I've got live data coming in, and then I'll actually be placing trades and reinforcing this tutorial. Thank you.